Hey everyone! Recently we've been talking quite a bit about high volatility algorithms and high volatility on the market in general, but recently Bitcoin has been looking more or less like this. There have been, of course, ups and downs, but nothing so dramatic as to cause high volatility and lots of trades for the coins. So I decided that I should speak about my flat algorithms and what I've been working on so far. And to further confirm that flat algorithms are actually required at this point is that in the last couple of weeks, after that big day on the 3rd of January, my high volatility algorithms have made only 55 trades, totaling just a bit over 300 USDT. So that's not too active. Luckily, since very late last year, I've been working on a set of algorithms for flat trading, and I call them natural selection. Why that? It will become quite apparent as we go along in this video. So as you can see, in the last 2 weeks, they have earned me 262 USDT with a pretty cool profit-to-loss ratio of 6. So across these 2 weeks, they're pretty much measuring up to my high volatility algorithms. And if we go to all dates, and I've started running these on the 27th of December, I've got 624 USDT for an ROE of 48%, which is pretty cool. I've been running these on 3 distances, 0.8, 1.1, and 1.5, and they all have been doing pretty okay. Some are better than others, but it's time to move on and set up the similar type of algorithm on the distance of 2. As you can see, I have nothing here for the distance of 2. So why is it called natural selection and how does it all come about? I'll walk you through the process of creating an algorithm actually, so this video is going to be a little bit different than many videos previously. Of course, it all starts with my data gathering algorithms. And here is the next iteration, the next evolution of my whitelist generator. I will have to explain all of this sometime later, but all you need to know for now is that we have selected only trades on flat Bitcoin, which is up to 0.4 in 5-minute volatility, and the distance of 2. Now, what this thing does is it selects all the coins that have performed well both on the sell side and on the buy side as well. So if a coin had been doing well on the sell side, but there's been nothing on the buy side, it does not get selected. And if it was doing badly on one of the sides and well on the other, like here, it does not get selected. So I want only those that did well both on sell and on buy at this distance on flat Bitcoin. And here I have the list of coins that I will be pasting into the algorithms in just a bit. Now I've got my selection. What do I do next? I go to this type of dashboard that I have, and the reason is that I want to check if any of the filters will be helpful to improve the performance of the coins that I have selected. So I need to recreate here the exact selection of coins that we had down here. And actually, the overall PNL for data gathering was 9.13. Take note of that number because I'm going to be using it to verify that it's exactly the same selection of coins. So let's go back here and apply the very same filters. So we want flat Bitcoin, we want distance of 2, and we want my specific coins. For that, I have made a little bit of a tricky selection formula, but basically to get all the coins that I selected there, I just go deselect blank, and I get all the coins that have been selected on the other sheet. And here we go, 9.13, which means we got exactly the same coins that were in the other sheet. Now let's just marvel at this. Potentially, I could get a profit-to-loss ratio of 12, when only 2.3 is required. Let's see if we can make that even better. So I'll go through different filters that I have available here and you take note of profit to loss ratio and the overall P&L and ROE. I do understand that you might not have this type of tool at your disposal, but what I'm trying to communicate here is the idea and the tools you select yourself. So the idea here is to take only the best coins and then check if we can filter them further to improve. So let's first start with the Bitcoin range. It goes from 0 to 4. Let's see if any of the sub-ranges are bad, for example, so that we might want to exclude them. So pretty much all of them seem quite all right. I mean, as you go up, it's getting a little bit worse on the profit to loss ratio, but I mean, overall, there is no reason to exclude any of these. So my BTC 5-minute absolute delta filter will be as intended from 0 to 0.4. Now let's look at the coins themselves. Let's check the 3-minute range for the coin at the moment of triggering the order. Alright, so from what I can see is the higher you go, the less trades you have. Like from 16 to 20, we have only 2 trades, and here again only 2 trades. So I will be fine with taking the vast majority of the trades that I want. So here we have 246 and the P&L is 8.2. Overall we had 9.13, so we're losing a little bit under 1 USDT. So we get about 80-85% of the total P&L, and I'm quite fine with that. That is in line with the Pareto rule. That's the rule that I like. So here in this selection from 0 to 16, we have a pretty cool profit to loss ratio of about 12, and it's not improving too much if we go add these ones. So I'm willing to exclude these two and stick with the range from 0 to 16, and that should be good enough. Maybe here it's a little bit crazy and I do not really have enough data. Like overall I have 4 trades here. It's not enough data to gauge whether this algorithm will stand during those high volatility on this specific coin. So let's limit ourselves to this. Now what else do we have? We have sell and buy. Remember I made this selection for the coins that were both doing well on sell side and on buy side. And let's verify. If we go to buy, we see we have 4.2 in P&L. If we go to sell, we have 4.0. So these are quite equal, and there is probably no need to split this coin selection between the sides. I'll paste them all as is. What else do we have? We have a 24-hour volume. So let's see if we can filter by volume to make things better. So apparently the volume does not affect performance all that dramatically. For some of the volume ranges we don't have too many trades, but anyway, everything looks good to me. So at this point I'm not filtering by volume. Also I have the coin 1 hour range. Here it is both negative and positive, and here I have the absolute value of relative delta, if that makes any sense to you. So here, let's scroll through these again and see if we can exclude any of them to make the performance better. Alright, so here I'm also seeing that this does not affect the efficiency of the algorithm too much, but the higher we go, the less data we have. Which means that for these very high ranges, like above 22, right here, I do not seem to have enough data, and I cannot expect the algorithm to perform if I don't know how it was in the testing phase. So we are gonna limit our selection to this range. So 1 hour would be from 0 to 22. And remember, this is the relative delta, so in the algorithm I will be putting in minus 22 to also 22. And now you may notice that by excluding these, our profit to loss ratio has dropped from 12 and a little bit to 11.7, which is not that big of a drop. Now, what else can we check? Maybe we can check coins by leverage. Let's just do that. And so apparently the best performing leverages are 20 and also 50. But I mean, I've already selected the coins regardless of their leverage, so they should all be good. At this point, I'm pretty much done with the filters. We've decided on coin 3-minute range from 0 to 16 and coin 1 hour relative range from minus 22 to 22. Now, another step of verification I want to do is something I call consistency. So I want to know whether this selection of coins right here was bringing in money kind of steadily. So if it was one burst of wins and then a lot of losses, then it's probably not the best idea and I need to think about it. So the selection would very much depend on the market behavior. Now here I have the data from the very beginning of November up until, well, pretty much today, or the 14th. So for consistency, I'm going here. I'm going to the breakdown of all my trades by dates, and I have already pre-filtered here distance of 2, flat Bitcoin, and only the coins that were selected by my natural selection method. So let's check this out. We have almost 2.5 months worth of data, and 1, 2, 3, 4, 5, 6. We only have 6 days where these coins produced negative results. So I guess this is pretty consistent. All right, let's go back here, copy our coin list, and go build our algorithm. So here I have freed up 2 accounts, and I'll explain a bit later why 2 exactly. So these algorithms are only running on high Bitcoin, and I will add my flat algorithms here. So first I go to do a folder, and I will create an algorithm together with you right from scratch. So it's shots group. Now for the name, I have some coding that I use later in my reports, so this is what I'm going to be using. NSGR0, which stands for Natural Selection Group 0. I'll explain groups in just a bit. Now these bits right here, I won't be explaining in too much detail. I'll just use the values that have shown themselves as doing quite well in my other natural selection algos. For trade latency, I go with 2. For order latency, I go with 1. And of course, I want to run my algorithm after it's made a trade, and I want to do it pretty quickly, let's say 2 seconds. Then I want to open these. For filter check frequency, I want to be quite precise. I have the value of 2 here. Now, this is a pretty interesting one. I used to run a lot of the time with a default value, but then I figured let's try something different. So order time window is basically like an expiry date for your order. When the core sends a request to the exchange, it has within the order request this value here. So I use 1 second. And it basically says that if 1 second had passed since the core sent the request to Binance, then Binance does not have to execute it. Do not execute it. So it's an expiry date. And it prevents us from getting into some situations where the core loses control of what's going on, where the situation on the market is now different than the situation when the core decided that it's time to place the order. I've heard of people doing fractional values of a second. For now, I'm trying 1 second. We'll see how that goes. Now, for market filters, we want to do a whitelist, and I will just paste whatever my super duper spreadsheet generated. All right, here we go. No blacklist yet. Oh, I must select USDTM, of course. No blacklist, we're gonna build it as we go, and the algorithm is gonna build it itself actually. Now, quantitative rules, I'm using none. We had quite a bit of discussion in our Telegram group about this, and I've explained why I do this. Now for the most important bit. We are actually using an active markets filter here on the whitelist. The reasoning behind this is this: the data has been gathered and selected while the coin was one of the top active markets. So why not make it trade when it is part of the active markets? And when it's not active, let's not trade, because I have no data to prove whether it's going to be good or whether it's going to be bad when the coin is not active. So here we go. As you can see here, we have 43 coins, and I want to cover more of them, but I want to split them into groups, because one account will probably not handle 43 orders on the sell side plus 43 orders on the buy side. So I'm splitting them. And the way I want to do this is as follows. Check this out. For group 0, you see I have group 0 here in the title of the algorithm. For group 0, I want just 3 active markets. And I'm not ignoring anything, but don't worry, I'm not only trading 3 at a time. More of them will come in group 2. And the list sorting frequency I'm leaving by default at 3 seconds. So let's build this up, and I will then show you what I'm thinking about for group 2 or group 1, since this is group 0. Price step filter and mark price filter I'm leaving by default, and then I'm going to use something called the funding filter. I'm not going to explain it right here, I'm just going to leave it by default, and the reason is I don't quite understand funding in all the minute details, so I don't want to participate. This requires a whole other video. Let's leave it at that. Now we've decided not to use any 24-hour volume filters, but a few symbol delta filters are in order. First, we're gonna go absolute 3 minutes. Let's just verify what we've decided. Okay, we've decided from 0 to 16, so let's put it in. And I also want to cancel my orders if the coin goes out of this range. Pretty self-explanatory. Now another filter I wanted to do was 1 hour delta. Let's check what that was. Okay, it was minus 22 to 22 essentially. Also cancel if it's out of range. I mean, I could regret in the end having so high of volatility allowed here, but I'll keep track of the performance and then I'll make them smaller if these higher values prove to be losing more than they're earning. I've actually did that with my lower distance algorithms. I had a little bit more here, and then I looked at the stats of real trading and then I rolled it back a little bit. Now, of course, we want to specify that this should be a flat algorithm. Cancel if out of range. Now, this is a last and most important probably piece of the puzzle here, well, except for coin selection probably. And it additionally explains why this is called natural selection. So what I'm going to do here in the performance filter is go algo symbols, which means that this filter applies to each individual pair in the algorithm. And for the value, I'm going to go minus 15. I'll explain in a bit why. For time frame, I want to go live time, which means that as soon as the coin loses me 15 USDT, the sleep timer is triggered. So I want to eliminate all the coins that have lost 15 from their best baseline. And in order to eliminate them, I'm not only putting them on pause or to sleep, I'm gonna go crazy on this. I'm putting 30 million seconds, which is equivalent to almost a year. So this way, this algorithm is pretty much building its own blacklist. So if any of the coins above in this algorithm lose straight 15 USDT, either in one trade or two trades or three trades, from their best result, then it's gonna be eliminated. And the algorithm will continue trading only those survivors that haven't lost that much money. That's why I called it natural selection. Now, why 15? Well, let's see, there is a bit of a reason behind this. But first, we need to go to order size, which I am setting at 1000. So back to 15. Let's check the actual data of what kind of losses we were experiencing on these coins. So here for this selection, we see that the average loss was 0.8%. Let's do a calculator. So for an order of 1000, losing 0.8% is equivalent to $8. So why 15? I'm giving the coin another chance. So if on average it loses $8, then I go, okay, you can still try and redeem yourself. But if it does that twice, it's $16. Now you gotta go. Maybe that's a bit harsh, but that's the way I played. Now for the parameters of the algorithm itself, I'm doing pretty much a carbon copy of what my data gathering algorithms were doing, because that's what our statistics is based on. Alright, this part was quite simple. At the moment, we are done with group 0 on the buy side. Now I'm gonna save and do a mirror image of this for the sell side. Alright, so I have group 0 done. Now I'm gonna duplicate this and make group 1, and I'll show you what the difference is. Now I'm editing both of these algos together. So here I want to make sure to input group 1 so that my stats in the spreadsheet could actually work. And the only change I'm going to make is for the active markets filter. So initially when I came up with these groups, it was group 1 and group 2. The first group was the first 15 markets and the other group was the second 15 markets, so covering a total of 30. Then I noticed that the second group is performing relatively much better than the first group. And what I wanted to know is whether it is because of the very top markets, so 1, 2, or 3. When a coin is crazy active, maybe it's not doing so well. So by using group 0 as a control for the first 3 coins, I'm trying to isolate and see whether the very, very active coins are producing worse results. So I want to cover in this account a total of 15 coins. So here I'm going to go 12 active markets. And then I'm skipping the first 3 because the 3 are covered by my group 0. Now we're all done. So on flat Bitcoin, this account will be running 30 orders, 15 on the buy side and 15 on the sell side, 6 of them all coming from group 0, and then another 24 coming from group 1. And I think 30 orders at a time are pretty taxing, especially with so many filters, so the remaining group, the other 15 coins, I want to do on another account. Here we are, another clean account that is only running high BTC at this point, and Bitcoin is pretty flat, so let's put this to work. Here we are, we have the same exact copy. Now let's make it group 2. For the active markets, I'm now going with 15 and skipping the first 15, which makes it 16 to 30. So to summarize the idea of the groups, group 0 will contain the top 3 most active coins out of those 43 in the whitelist. Group 1 will contain coins from 4 to 15 out of the 43, and Group 2 will contain coins from 16 to 30 out of the 43. And at this point I could pretty much go save and run. Here we have our orders, exactly 30 of them. One more thing left to do is to go back to the other account and start group 0 and group 1. Let's go. Now this account has been put to good work, even on the flat Bitcoin. Again, we have 30 orders. And here we have a list of markets. And here are my orders. One more important thing to do is to go to your trading performance and reset it. The reason being is that once the coin goes to sleep, there is nowhere that you can see it being asleep other than in your trading performance. But here I have data from past trades, so I'm going to go select all and reset. Now trading performance has been reset, everything is 0, and now I will be able to see here for each algorithm which coins did what. And if I see that somebody lost 15 or more or somewhere around there, I can verify that no orders are currently being placed with that algorithm on this coin. Now, good luck to my algorithms. With the market that we're currently having, I'm not really expecting too many trades at the distance of 2, but it will be ready once the market wakes up. And now, as per usual, let's go to Show Me the Money. Now, last time we were here at 46.88, and now, a week later, I am at 49.73. Now, let's look only at the recent days, because this table is getting ridiculously long. Oh, here we are. As you can see, there haven't been so many trades on high volatility where I'm trading 1.7, and for the first time probably in history, my flat algorithms brought me more money than my volatile algorithms. That is pretty cool. So since last time, I'm plus 284. And of course, let's look at my dashboard in Profit Sharks. Here it is. The previous day was in my spreadsheet, but today is not. And I'm on a roll today. Well, my algorithms are. And mind you, this is only flat. This day and this day, no high volatility trades at all, from what I can remember. So that looks pretty good to me. And here, as of the day of recording, I'm now past 5,000 in total. I'm thinking about making this like a cutoff point so that my list of days and profits and losses is a bit more manageable. Let's say I'm at 5K and then we'll reset to 0 and start counting from there next time. So what have we learned today? Today we have seen that it is possible to make money even on a flat market. But the way it's done, at least the way I do it, is quite a bit more convoluted than on high Bitcoin volatility. But still, it provides quite a good counterweight to the absence of high Bitcoin trades. And secondly, what I hope we all have learned, that what's more important is the idea and not the specific tool that you use to implement it. Well, of course, the tool is Moontrader in this case, but the idea of active markets, of selecting whitelisted coins based on the previous performance on data gathering, that all can be done in other ways. And I hope this idea works. And if you like it, maybe try it, maybe don't. It's all up to you. This is just what seems to be working for me. And at this point, I'll wrap up. Y'all have a very nice day, and see you soon.